What's up guys, welcome back to another video, and the purpose of today's video is we're going to run through the harmonic shark pattern. So go over to my website ottrades.com and click on the drop down tab at the top here. It's going to show you all of the patterns, advanced and harmonic patterns. There'll be a video breakdown of each one, as well as the little diagram here for each pattern, the trade setups for the patterns and the trade management techniques for each pattern. All of these are the conventional ways of trading these patterns. So let's jump straight into it. As with all the patterns, the initial price leg from X to A is how we're going to start this pattern. And this is just an initial price swing, so it's not determined by any Fibonacci ratios. And this initial price swing is in the same direction as your reversal that you're going to be looking for. So if the X to A leg is bullish like it is here, or we're going to look to buy the market bullish, then at the D point you're going to look for a bullish reversal of that pattern. So the next point is the B point. The sharp pattern is relatively simple compared to the other harmonic patterns. The B point is going to form by fulfilling at least a 382 retracement of X to A leg and does not exceed the 786 of X to A. So we're going to get our Fibonacci retracement tool, take it from X up to A, and at least 382 does not exceed the 786. So that means our price has got to retrace to at least this 382 level here and does not exceed the 786 level. Now price can come down into this level and price can exceed the 382, and then price can then retrace within the same candlestick and price can close above this 382 level. So long as the wick has exceeded that that level, it doesn't matter about the close price. Now you might backtest this differently. You might take into account the close price because that would be a rejection candle here. But personally and conventionally, that's not taken into account. It's just the price extreme. So where price has gone to within this candle, so the candle wick would exceed 382, even if it closes above it, that would still count as a valid B point. That does not count here. Now it says it does not touch the 786. So even if a candle wick exceeds this and price comes back to close above it, that's an invalid pattern. Now, a lot of the times this would still be valid as long as price closes back above it. With the sharp pattern, this invalidates the pattern. So price cannot exceed the 786, whether it's a wick, candle close, no price can exceed that 786 level. So I'm just going to put it at the 618 level for now. Label this up as the B point. So the next point is obviously the C point. Now, unlike most of these patterns, the C point is actually extended, so the C is higher than the A point on these sharp patterns. Similarly to the cipher patterns, however, different ratios are used. Cipher patterns also have extended C points. So get rid of this and get our Fibonacci extension tool out. And we're going to go from X to A because it's an extension of this X to A leg. X up to A. And back down to X, and it's a 113 extension of X to A and does not exceed the 618 extension of X to A. It's 113, 618. So price again has got to retrace from the B point. It's got to at least exceed the 113 extension of X to A, but cannot touch the 1618 level. So similarly to the B point here, same rules apply. The candle wick can exceed the 113, but it can't exceed the 1618. So candle wick can exceed 113 and come back down and close below it. That would still be a valid pattern. So if I just leave this C point up here, so long as our C point falls within those two, within this range here, from the green to the blue line, that is a valid sharp pattern. Now finally for the D point now, says potential reversal zone here. Now unlike all of the other harmonic patterns, the sharp pattern acts more of, well, the D point at least acts more of a advanced pattern, but there's only one point. So this D point is quite simply the 886 retracement of X to C, rather than being formed of three Fibonacci retracement or extension levels, creating our potential reversal zone. This is just a single D point, so the 886 retracement of X to C. So delete our extension tool, and we're going to stretch our fibs from X all the way up to C now. So we're taking into account this entire move higher. And price has got to retrace, and the D point is going to form at the 886 retracement of the X to C leg. And that forms our shark pattern. That is our harmonic shark pattern. So let me just get this, infill these quickly to make things a bit clearer. So this is the shape we're looking for to confirm our harmonic shark pattern. Now in terms of managing the trade, the stop loss goes at the 113 extension of X to C. So we're going to go 113 extension of X to C here. So this is our stop loss level below X. That's our stop loss here. Just label that up. And our targets for the harmonic shark are 382 of the C to D leg. So now we're taking into that account that entire price swing again. The 382, taking into account the entire price swing from the C to D point. So rather than it being an X to A retracement, we've pushed higher, we've pushed above that A point. So we need to remember what I've said before about our Fibonacci levels. They work from price extremes. They don't take into account, they don't really care about your situation in the market. They take into account what's actually formed in the market. So the C point is obviously the highest price that we've reached within this pattern. So we're going to stretch our fibs from the C to the D point in this instance. And the targets are going to form at 382 and 50% retracement of C to D. This is one of the only patterns where we conventionally trade to the 50% level. Usually it's 382 and 618 of whatever you're stretching the fibs to, usually A to D, usually A to D, 382, 618 of A to D. For the shark, it's 382 and 50% of C to D. So this is going to be our target one here. So we're looking for price to reverse at the D point, target one here, and target two at the 618 level. Similarly, target two at the 50% level. Similarly to the other patterns that we've gone through on my website, we're going to, once target hits our 382 level, once price hits our first target, 382, we're going to move our stop loss up to break even. In this instance, we've secured half of our profit. So once we hit our first target, we're going to take half of our position off of the table in profits. So we're going to close half of our position in profit, and then price can either move back down to our stop loss, which is at break even. So it will cut us out of the trade at zero, plus whatever we've taken off at the first targets. Or price can continue higher and take us out at the second targets. So it's a risk-free trade at this point. So we're no longer risking anything because we've secured our profits, moved stops to break even. So the maximum we can lose is nothing. We can't lose anything. We just won't win anything. Or price can continue to move higher and hit our second targets here. Again, to manage the trade, if price doesn't immediately reverse at this D point but continues lower before inputting a reason to get in on a trade, or if you've entered the trade on a limit order at the D point and price continues to move lower, you need to restretch your fib levels down to the price extreme. As I mentioned up here with the C point exceeding A, the fibs take into account price extremes, an entire price swing. It doesn't care about your situation in the market. It doesn't care that you've got in here. So you should not be leaving your fibs retraced at the entry point. You should take into account the entire price swing. Move your fib levels down to with the price if price continues to move lower. And that's obviously going to bring your targets down lower as well, so you need to adjust your targets again. Same rules apply. If price traces back up to hit target 1 here, move your stops up to break even again, and then it will either stop you at break even or continue to second targets. But just as an example here, that black line is where I've just drawn the adjusted targets now that we've dragged price lower. The original targets would have been much higher up here. So the lower price goes, if you've entered on the limit order at the D point, then you're just going to be dragging your targets lower and lower and lower as price moves down. Obviously, if price continues to move lower, we're just going to get stopped out of the trade. This is our invalidation point. What we're saying at this point is that price is now unlikely to reverse, but we're expecting price to continue lower. Therefore, we need to get out of the trade and just cut our losses at this point. So I hope that makes sense. That's everything covered on the harmonic shark pattern. Again, check out my website. All of the pattern explanations are on there. You can also get OT software on here, identifies every single advanced and harmonic pattern itself. No manual working out all of these ratios and stop loss levels. It prints it all for you. So check that out as well. Yeah, thank you very much for watching. See you in the next video. Cheers. Ta-da.